But we do have an incredible guest speaker who is here with us today from MRIA, which is the Multicultural Reinsurance Association. We have Lee Vu, who is the founder and president of MRIA. So thank you for being here with us today, Lee, and I'll let you take it away.
Awesome. Thank you, Tandeka, and thank you to Spencer for putting this together and allowing me this platform to engage with the students that are part of Spencer and beyond. So I'm grateful to be here. Hi, everyone. Good afternoon. Good morning. I don't know where you are, where you're located, but hopefully you drop it in the chat so I can kind of get to know where you guys are. And hopefully at the end of this all, what I would want you to walk away from this is to learn a little something about reinsurance, but at the end of the day, to hopefully make connections with all of us that are here today. So we are all here to talk about reinsurance. I'm not sure how many people know what reinsurance is or are involved in reinsurance in the capacity, whether you've learned it maybe a little bit in school or not. But I figured it's an area that I've been in for 20 plus years at this point. So it's kind of nice for me to kind of take a step back, kind of from when I started in the industry, learning about reinsurance. And I view it as something that's very integral to the insurance industry and the risk management world, that the more I can share from an educational standpoint is kind of what I'd like to do. So a quick background about me. I know you probably either through Spencer have probably seen some, social tiles. So my name is Lee Vu. I am the founder and president of Multicultural Reinsurance Insurance Association. As Tandeka said, it's called MRIA. I say like the name Mariah without the A, so it's MRIA, just to make it easier for everyone. But the organization was built upon bringing a different perspective when it comes down to DEI and how I view it from the perspective of being in a global industry as we are, but also looking at it and sharing the different avenues that is available to the industry, not just the typical that you would normally see, which is the underwriting side or the front facing, but also the different areas in which we do business, right? So to kind of get started, thank you everyone for dropping some chats inside. So I'm just looking at them. So if you see my eyes rolling through, it's just a little bit of that as I'm reading through. So welcome, Vanessa, Charlie. I see Lavish. I see who else? I see Paul. I see Callie. I see Marek. I see so many people. So thank you so much for joining. And I see Vin, who I met recently at the Risk World event not too long ago. So it's great to see you guys on. So let's get started. So I put a couple of slides together, nothing crazy. It's just to really engage with you guys more so, to just kind of go over what reinsurance is, how important it is to the industry from my perspective. And please feel free to ask questions as you go through. So the first slide that I have here is that someone had asked me in one of my LinkedIn posts, what is the one key insight that I want the students to take away from this session, is that reinsurance is a risk management tool, right? Whether you're in a specific program for risk management, insurance, actuarial, or any of those areas of the business, that reinsurance is a really key piece to me that is a huge driver for the insurance industry. And obviously there are couple formal definitions of reinsurance specifically, but obviously to me the most easiest and the most simple one is pretty much reinsurance is insurance for insurance companies, right? So what happens at that level for a reinsurance standpoint is that companies like what you see out there, AIG, the Hartford Travelers, Ascot, all these insurance carriers, all what we say buy, right, reinsurance, which is coverage for themselves, and where it's an avenue for them to pretty much, the purpose of it for the insurance company is to really help the insurers like spread their risk, right, and at the same time manage capital. And when I say those things, I'm going to go into a little bit more about it just so you guys can understand why it's so important to the industry and how it's so important to the insurance company in itself. And one, like you see, like I just wrote down quickly the quick benefits of it. It's like, obviously it enables like the insurance company or the insurer right, to manage risk. And when we say manage risk, they are able to spread their risk out to what we call reinsurers. And I'll get into that a little more in briefly. But it also allows them to increase capital, right? And then increase capacity in kind of what they write. So look at it like this, in the sense where an insurance company is buying this type of protection, or this type of coverage for themselves, and they are looking at all their risk that they have. And imagine if every single policy that they wrote had a loss, right? A full limit loss. It would literally put the company in financial strain. Obviously, maybe what people call go into runoff, maybe that they won't be able to write business if all those policies literally had a loss and everything was like a limit loss. They wouldn't be able to sustain themselves as a company, as a carrier. And at the same time, when that happens, obviously policyholders that they, have policies with, that is a financial impact and a dire need that is no longer available for their policyholders. So at the end of the day, we're here to be a resource. And I everything I feel like we do in the industry is that we're partners at the end of the day, everything in what we do. And we always want to make sure that everyone involved is financially, able to sustain everything that they're doing. So reinsurance is a key piece, and from the insurance company, and there's like a specific department that handles this. And I'm going to go into some terminology, and I don't want to go there right quite this moment because I don't want to get too much into the weeds about all this. So what happens when an insurance company buys reinsurance? They, like I said, allow them to increase their capacity. When I say increase capacity, I mean that the company, let's just say their underwriting guidelines allows them to write almost only so much business, right, from a certain capacity. What happens when they buy reinsurance? They're able to literally increase the capacity in what they're writing business. So it allows them to take on more business. It allows them to increase their capital because obviously, when they take that risk off their books, they're able to kind of do more, right? So the other piece of it where I say it alleviates some reserves, right? So they're able to take on more business, right? With the extra business and the more business that they take on, there's also risk that's involved from claims and losses that might come through. So it's a way to also enhance their capital at the same time, and access to like expertise in kind of what I have here. It's a way like the people that they're transferring this risk over to, which we call reinsurers, it's like a reinsurance company, that they're able to take on this risk and they're able to tap into the expertise that is available at the reinsurer level. So as I'm just kind of going through it, and it's a lot of different moving pieces. So feel free to just drop some questions, or if I'm moving too quickly for you guys, to let me know if there's something that you guys want to talk about a little more. And I just jumped a little bit, but some key terminologies for you guys here, right, is the insurance company sometimes is known as like the ceding company, the cedant, or the reinsured. Those are some terminologies. If you're in reinsurance, it comes readily available that you understand what it is. But the insurance company in itself, those are some key terminologies that I think would be beneficial for you guys to learn about and know and just hear what they are. Reinsurance company, obviously, reinsurer, it's who we transfer our risk to. And then in between all that, there's what we call an intermediary and a reinsurance broker. So I'm going to jump to the next slide because I feel like this is where I feel like it would make a lot more sense for those who are learning about risk management and insurance to see the different parallels between insurance and reinsurance, right? This image I found somewhere as I was kind of like, doing some research of just like what would make it really evident to show how connected both areas are. And if you look at this depiction of just insurance and reinsurance, where you see this one side over here, the insurance side pretty much, right, is assuming risk from a consumer, a policyholder, right? Reinsurance in the same sense, it is doing the same thing, but it's a risk that the reinsurer is assuming from the insurer. So Jacob, is there a link for the presentation? No, not at the moment, but I will share this with Tandeka and she could share it with everyone who is on the call, just so you guys can have something to reference back to. One of the key pieces of it where I think is truly valuable for you guys to know is, like, for me specifically, I work in reinsurance claims. I work for an insurance carrier specifically. So my role is really pretty much all the risk that the insurance company buys. I share that information with reinsurers and I collect money back, right? So where we go to the next bullet point, where the insurance side collects premium from the policyholder, right, for protection. The other piece of it too, where for reinsurance purposes, we are sharing the premium. So let's just kind of go from financially the key pieces of it. The insurance company buys this reinsurance coverage for themselves. For everything that they buy, obviously there is a transaction that happens initially, and that is premium, right? Just like with an insurance company, with the policyholders pay a premium for the insurance that they're buying. Same thing on the reinsurance side. There is premium that gets exchanged between the insurance company and the reinsurer. And obviously the middleman here is the reinsurance broker. And the premium of all the policies that they are pretty much covering, let's just say it's a book of business and it's one line of business, and let's just use property, right? I think it's a pretty straightforward. So let's just say for all the property insurance policies that they have, they decide to buy reinsurance coverage for. And to keep it really simplistic, right? And they buy it at a structure, right? There's like different types of structures. And I don't want to go into all this because it's so much and there's so many different details, and it might be more than what you guys all signed up for. So I don't want to get too much into all that. But let's just say the coverage that they bought is a 50% proportional structure. So literally it's shared 50%, and everything is cut right down the middle. So in order for the reinsurer, which is the reinsurance company who is assuming this risk from the insurance company, they also have to share that premium. Meaning, so let's just say the insurance company that year wrote $100 million in insurance premium. If they are buying this coverage for themselves to protect themselves, they are literally at that 50%, like I said, proportional share. They literally have to share 50% of that premium with the reinsurer. So for everything, like I said, there's a transaction that happens, and that's the beginning of it, right? Based on a lot of different actuarial models and things of that nature that also go into how it's priced and things of that nature. But just as really simplistic, it's like for insurance, it's the policyholder insurance company, where premium gets exchanged. On the reinsurance side, it's the insurance company and the reinsurer, right? That where premium gets shared. The other piece of it that makes it very interesting is that we're still talking about that 50%, proportional like coverage that is in place. So when a loss happens at an insurance company, and let's just say the loss is $1 million, whatever structure that is in place that the insurance company has purchased, the loss is pretty much handled in the same way. So if a claim is paid out at $1 million and the structure that was in place is 50%, what happens is that the company is only responsible. Well, hold on, let me say this. The company is responsible to pay that entire loss, right, to whatever it is that settlement is that they went into. But on the back end, what happens is that $1 million, based on a structure, based on a contract that is in place between the insurance company and the reinsurer, the reinsurance company, they get to share that loss as well. So on $1 million loss at 50%, $1 million is no longer $1 million to the insurance company. It is only $500,000 because 50% of that is now also being pretty much shared with the reinsurer, right? So that means that the reinsurer who has been part of this coverage that was there gets they pretty much pay the insurance company $500,000. And Nia has her hand up, if I'm seeing that correctly.
Yes, I think this is a great time to pause for questions because I know it's a lot of information that is coming at you guys, and I know you have questions, so please feel free to ask. Go ahead, Nia.
Greetings. I am Nia Mason. I am a fourth year actuarial science scholar at Florida A&M University, and I'm currently a risk management intern for Florida A&M University. And my question is, how do reinsurance company access price risk differently than primary insurers?
So, okay, great question. So pretty much like your reinsurance broker, right? So what they do on the insurance side is obviously they companies look at their portfolio, right? Let's just say there's two different types of reinsurance coverage that's out there. That's actually more, but I'm just going to give you the two main basic ones, which is treaty. Treaty coverage pretty much is covering a book of business, a portfolio book of business, right? Whether it's by line of business, let's just say property, casualty, professional liability, but there's also facultative. So when you talk about the pricing and things that go on from there, there is a whole host of things that happen from the insurance side that they look at everything. They look at their loss trends. They look at all the various expenses that pretty much are encompassing for the company. And they go out to the reinsurance broker and then they share this information with them and they kind of allocate all that information together. And there's different models that actuaries use to pretty much price out what they're going out to the market for. Does that make sense so far, Nia?
Yes.
Okay. So once that happens, there's also and I'm getting into the weeds because there's a lot of moving pieces. There's also what you call the ceding commission that happens as well, right? There's a broker fee. There's all these different figures that come into play to be able to price it out by the time it goes to a reinsurer. And the reinsurer looks at it and says, okay, based on all these different parameters and based on a combined ratio at some point, which as you talk about, like companies look at combined ratio and it's a big telltale for if something is profitable or not. It's the same concept. So they look at it from that perspective, adding in a ceding commission on top of all these other fees that are associated when you do a reinsurance deal is pretty much what reinsurers look at to say whether or not they decide to come on board. And you can have multiple reinsurers, right, on one, let's just say a treaty placement that's there. You can have literally multiple reinsurers on it, and they just might place a specific line based on what their appetite may be. Does that answer your question, Nia?
Yes, it does. Thank you so much.
So I'm going to ask you a question since you asked me why. So I'm going to ask you, so what made you talk about that? So like, how does that tie into what you're doing and how does it make sense for you?
So yes, as currently as a risk management intern, I'm very like open to learning new ideas and everything. And I was very confused on how price affected everything. And I am new to risk, so that
Okay.
was me trying to figure it all out.
All right. Connect with me on LinkedIn because there's an organization. I'm not sure if many of you do. Many of you probably do already, but there's the National African American Insurance Association. So they have an annual conference, and the last session I did with them was literally on actuarial and pricing. So there's a lot more that goes into it, and I will be happy to share it with Tandeka so she could share it with you. So you could literally see from an actuarial perspective, when you look at pricing, when you look at, reserving, the difference in what you look at from each piece that ties into reinsurance, specifically from the insurance perspective.
Okay, thank you so much.
Awesome. Does anyone
Great
else have
question.
questions?
Yeah, I wanted to see who else has questions. Or perhaps maybe, if you guys want to raise your hands, like, is this the very first time that anyone here is like learning about reinsurance, has heard about reinsurance? Is this your very first time hearing about these concepts? If so, just kind of give us like a raise hand. I see a lot of nodding heads. Okay. Yeah, so fantastic. And we're so grateful, to Lee for being here today because there's literally an entire career path, just in reinsurance. You could literally build your whole career around this specific sector, in the industry. So hopefully this is all making sense, to everyone that reinsurance is insurance for insurance companies.
Correct.
Hopefully this is making sense for everyone. But if you have questions, please do not be shy. We completely understand this is your first time hearing about these concepts.
So I want to now I'm gonna turn this around a little bit because I don't want to keep doing the talking because it becomes repetitive at times. But just like Nia, can you guys maybe, if you're not comfortable speaking up, like just drop what it is? Like, is there something that I've spoken about that doesn't make sense? That because it's the first time hearing about it, is there something you want me to go back to specifically that kind of will give you more insight, especially with your major and what you're going to school for, how I could tie it into what you're doing to make it make sense. Oh, I see Jacob's hand. This is so great. I could see all the faces. I love this.
Hey, how's it going? I'm Jake. I'm from App State. Currently in Colorado for my internship with AES. And we do a lot with just like purchasing insurance, but we don't really deal with much in reinsurance. My
Mm.
question is, reinsurance, you have to assume you get your premium and hopefully you don't get as many claims to make a profit. But how often do claims come about in reinsurance?
That's a good question. So the way it works from, and I'm taking it from the claims perspective or whatever. So it just pretty much is based on the insurance company's appetite and what they choose to buy, right? I will say 99.9%, I would say most insurance companies buy reinsurance, and you may not even know it that they do. But the one area that someone had told me back then when I first started in is that pretty much every insurance company buys property reinsurance coverage for themselves. So just think about natural catastrophes like wildfires, earthquakes, hurricanes, things of that nature. That's a big impact to the insurance industry. So imagine all those insurance companies who are impacted by these natural catastrophes. If they didn't buy reinsurance for themselves, the impact to the industry from an insurance standpoint would be detrimental. So the fact that most companies will buy property reinsurance, because obviously if you're in insurance, I'm sure you have a property component to your book of business, that it's able to sustain these types of losses because they have reinsurance coverage. Does that make sense, Jacob?
So if I'm summarizing this correctly, usually reinsurance is purchased for insurance companies for natural catastrophes or big claims all at once.
And it's an avenue for them to be able to absorb those types of losses, right?
Okay.
So let's just
Is
say,
there
go for it.
is there anything other than natural catastrophes that they're buying reinsurance for?
It's literally for everything that you can think of. It
No, fair
spans
enough.
all lines. So for me specifically, I'll go into my background. So I currently work for an insurance carrier at this point. So I'm working on the ceded side, right, for a ceded. I've also been on the assumed side, which is working for a reinsurance company. So every line of business that I've handled at one point or another literally spans all lines of business. So property, of course, commercial, personal. There is casualty and various avenues of the casualty book of business, whether it's GL, whether it's construction, labor law, all those different avenues. There's professional liability, right? D&O, LPLA, which is lawyers and professionals, A&E, architects and engineers. There's a component of employee liability. There is also surety, which is from a construction standpoint. There are other avenues Workers' comp is another one, right? So there's all these areas of the business that ties into reinsurance. It just depends on the insurance company and pretty much what they are writing for them and the coverage that they buy for themselves. But literally, it spans across all lines of business.
Gotcha. Thank you so much.
So I'm going to just, let me just think of like an interesting claim that I've touched on back then. I want to make this relevant where it intrigues you guys enough to like, oh my God, there was reinsurance on that. Back then, does anyone remember oh my God. I can't remember his name. Who is the comedian that was hit by a Walmart truck? Can someone help me out here? Oh my God, I'm gonna have to look this up.
Is it
Morgan?
Tracy Morgan, yes. Who said that?
Sean said it.
Yeah.
Awesome. Thank you so much, Sean. So that in itself, at one point in time, there was reinsurance coverage for that accident. Don't know what the settlement number was. It was pretty significant. I can't remember from the top of my head, but just know like there was reinsurance to cover that. So the insurance company paid, and multiple insurance companies obviously had paid money, but on the opposite end, they were able to recover some of that money. Recently, just a typical Nat Cat or a big catastrophe was the bridge collapse in Maryland, right? There was a lot of reinsurance in play there as well. Go ahead, Tanzeko.
Yeah, so we have a couple questions in the chat box, but
Sure.
I always love to give you guys the opportunity to ask the questions yourselves if you are in a space where you're able to, if you feel comfortable enough to unmute yourself. So I see Lakshmi has a question. I see Charlie has a question, but I'd love it if you guys are in a space where you're able to unmute yourselves and ask your questions.
Hi, this is Lakshmi here.
Hi.
Hi. So my question is, I would like to know what are the transferable skills from reinsurance that we can transfer it to banking and finance?
That's a good question. You know what? I feel like for reinsurance, just like for insurance in general, I think for a lot of different industries out there, all your skills are transferable, right? I feel like the one key piece that has helped me in my career in reinsurance specifically is just being curious and asking questions, right? And what you learn in school and things of that nature, it's great knowledge for you to, it's just like the building blocks for you. But for reinsurance specifically, I feel like there's so many different avenues, right? There's the actuarial piece of it that you can think about. There's also, the accounting piece, there's the underwriting, there's claims, there's, modeling, there's different types of areas that I feel like ties all together. And I feel like banking, finance, like those skills that you're learning on numbers, right? You could transfer that, when you're looking at different numbers, like understanding financial statements, how it impacts, like, and how reinsurance impacts, like the financial statements, things of that nature. It's a big asset for a company. Things like that, I feel like are transferable in all aspects. But is there something for you that you want to see whether or not your skill set would be able to be transferable into reinsurance? Would you mind if there's something there that you would like to touch on specifically?
I would like to understand ICS controls and Power BI tools. How can those skills be transferred into banking and finance?
Okay. If it comes
That is
down to that,
basically what I'm trying
okay.
to say is basically the aging reports and the KPIs and ICS controls, having those skills from reinsurance, how can I transfer that into banking and finance? I mean, when I'm looking for opportunities in banking and finance, how do I reinforce my achievements in ICS controls and BI power tools?
Okay. I will say for reinsurance that there are complexities when it comes down to exactly what you were talking about. To be able to ingest all the information that comes in from reinsurance. And sometimes certain structures that companies buy could be a little complex, that it's not easily transferable into like a Power BI report. And it doesn't always translate that well. But the key pieces of it is, I look at it is, if you know how to look at data, decipher data, no matter what, maybe it's not in a specific tool, but if you understand how to work Excel and be able to do pivot tables and things of that nature, and just gathering data and be able to sort through the data where you can come up with concise, information based on whatever it is that you're looking at, is a key piece of it that I think is very helpful. And that obviously can transfer into banking, finance. Being an Excel person, which is not me, but what I think would be very, very helpful in that area. Does that answer your question?
Yes, it does, kind of. Yeah, we did the baseline. If we go very much into detail, if we go to the granularities, I'm sure everybody's over here is going to get quite knocked off, and that's not my intention anyways. So I think, yeah, we did touch base on most of the aspects.
But yeah, please feel free to connect with me on LinkedIn, and I'm more than happy to have a more deeper conversation with you to see what is it that that you're looking at, and the skill set that you currently have, and how that all translates and pretty much works together.
Perfect. I'll do that. Thank you.
Awesome. Dorothy has her hands raised, I see. You're on mute, Dorothy.
Oh, yeah. Hi.
Hi.
So I just joined the meeting just like a few minutes ago. So I just want to understand. I am doing my master's in business analytics. So I want to know, with that in mind, and my background is I did bachelor's degree in accounting. Can I venture into the
Reinsurance?
Yeah. I think it's like similar question to what she was saying. She was asking. I don't know.
I think with all that, like, especially students, right? Reinsurance is probably usually not like the first place most students go into, but we have such a need for people to understand reinsurance more, that everything that you're learning in school right now there's an avenue for you to make your way into it. And I will say, for the longest time, reinsurance was almost like this, I don't know, this area of the industry that everyone thought was so, untouchable, but it's really not, right? I learned it from the ground up, right? And just learning all the key pieces of it. I think if you're willing to take time to understand the different concepts that's related to reinsurance and how it ties into the insurance and risk management world and all the other areas that you're talking about, right? You can take those skill sets and find a position or an area of the industry that would be very helpful for you. But connect with me too, because I feel like there's like a lot of questions around that, and I'd love to go more because I see a bunch of other hands coming up or whatever, and I want to be able to answer some of the other questions that's there. Okay, I see Mary Angela.
Hello, hi, I'm Angela. I'm a student at St. John's. I'm majoring in enterprise risk management. So thank you, Lee, for sharing with us the 101 of reinsurance, right? So I guess my question is probably very easy for you. Do you have any mentorship programs or groups specific to reinsurance that you could recommend? And I ask this question because currently I'm exploring shifting from primary insurance to reinsurance.
Oh, beautiful. Welcome. Like, I welcome anyone from the primary side to want to come into reinsurance. And I'm going to tie this into another question that I see in the chat. And this is from Charlie specifically, to talk about facultative reinsurance. So my personal opinion is, if you're on the primary side currently, whether it's underwriting claims or any area within the insurance realm or risk management realm, find your way to get into facultative reinsurance. And when I say facultative reinsurance, as I mentioned earlier, there's, to me, two main types of reinsurance that is out there. One is treaty, which is literally a coverage for a portfolio book of business. facultative is from an individual risk. So let's just say if you're an underwriter, you're looking at all these different risks, right, for what you're about to bind for the policy, for your policy holder. Facultative to me is very similar in that sense. You're looking at it from a different coverage standpoint, but you're looking at an individual risk and buying reinsurance for that one individual risk, because let's just say there is no coverage anywhere else that you're able to supply for the policyholder, that most people, underwriters, will go into the facultative reinsurance market to try to get coverage to kind of pretty much substantiate the gap that they're looking for. So for you, I think you it says Mary Angela, but I think you just do you prefer Angela? Is that what it is?
Sure. Yes.
Okay. That for you to look for any roles that are facultative reinsurance roles, because I feel like that would go hand in hand to kind of what you're doing on the primary side.
All right. Thank you. Thank you so much.
You're welcome. And then Charlie, does that answer your question on facultative?
Yes, that does. Thank you so much for answering that. Hi, everyone. My name is Charlie. I'm actually at work right now. I'm at the Philly office with Munich Reinsurance. I've been with them for about a few years now. I just saw a few internal openings that's related to facultative reinsurance. That's why I had that type of question I have for you.
Oh, good. So I'm gonna drop someone's name in the chat, and she literally is on the facultative reinsurance side at Munich. So find her on LinkedIn and connect with her.
Oh, okay. Thank you.
Yeah. And if I need to, like, let me know. I'll put you in touch with her, and I connect you guys on LinkedIn as well.
Okay, thank you.
Jacob, you have another question?
You're on mute, Jacob.
That's embarrassing. Whoops. So hello again. I just had a quick general question. Every time I hear reinsurance, it's never in the US. I did some quick little like research. There's tax implications, regulatory. Can you explain the financial benefit of like being outside the US? And is reinsurance ever going to be like implemented in the not implemented, but is there going to be reinsurance that could eventually start happening in the US?
I guess I'm trying to answer, like you're saying.
I can rephrase if possible.
Please.
Sorry about that. So this I'm trying to get at is most reinsurance companies aren't in the US, but what if a reinsurance company does want to start looking into the US? Like actually like becoming based in the US, so like Bermuda, and then working with the US?
Well, I feel like, as you know, like the Bermuda market obviously is very friendly from various perspectives, from a regulatory tax perspective, that a lot of companies do, and the ones that I know have kind of come out of Bermuda, being a Bermuda based company in itself. There are, let me try to think. That's a good question. I'm trying to think if there's anyone that specifically that. Majority that I could think of are international. Like when you talk about reinsurance companies, like Reinsurance, like a Swiss Re, a Munich Re. I know someone on here I saw was from SCORE, which is a place that I've worked at previously as well. That's a good question. I'm going to ask someone like if there's ever, or if there is, that I don't have the answer to, but I'm going to find out and I'll get back to you if there's an actual U.S. domestic reinsurance company. If that's what you're asking, that correct?
Yes, ma'am.
Okay. I don't know the answer to that, but I'm going to get back to you because I'm curious to know, obviously, too.
And can you also explain just a little bit more in depth, like the actual like financial benefits of like reinsurance outside the U.S.?
The benefits outside the U.S.
Mm-hmm.
So I guess like when you say outside of the U.S., meaning for the actual reinsurance company,
yes, ma'am,
the insurance carrier itself.
The company, or so the company providing insurance.
Okay.
Providing reinsurance.
So for the insurance company specifically, it's a huge asset, right? And I was looking this up earlier. the market cap for the reinsurance industry right now, I think, is like over $700 billion. So the capital that's available is pretty significant. So for reinsurance companies specifically, the benefit for them is kind of the question you're asking, right? Right. What's the reason why they're in it?
Of course.
Okay. So for me, I feel like the benefits for them is that reinsurance companies, like let's just say the ones that I've worked for before, their overhead is not that much because like most of the people who work for reinsurance companies, they're very they're an expert in their area, whatever the case is. There are key pieces that make it beneficial and attractive for them. I'm just trying to think like off the top of my head to answer your question and give you the right information. I'm going to get back to you on that and really kind of just lay out some things for you from that perspective. So I'm going to get back to you on that because I want to try to get to some of the other questions. Is that cool?
No problem at all. Yeah.
Okay, awesome. I see something from Michael Zuckerman talking about getting the ARE designation as well. And then, yes, the IRUA is another resource about reinsurance that you guys can get involved with as well. And I see Sean has a question.
Yeah, I had a quick question. So one of my projects that I'm doing at my internship is researching the Fair Plan Act in California with the wildfires. So speaking of reinsurance, I want to know if you're a government agency in reinsurance, like when Hurricane Sandy hit a couple of years ago back in my hometown on Long Island, and they needed reinsurance for all the stuff. How does reinsurance work compared to a private insurance company versus a government funded company?
That's a good question. So I'm going to take this from my own personal perspective. At one point in time, FEMA, obviously, right, provides avenues for people who have been affected by actual natural catastrophes and things like that. I don't know exactly how they work from a government entity, but I feel like it's pretty much similar in the sense where they're looking at the different key risks that they have. And when they do have some sort of natural catastrophe, that they're literally buying coverage for themselves to be able to absorb that huge type of loss, right? So FEMA in itself at one point, I'm sure they still do, but I don't know 100%, but this is going back years ago, that FEMA also buys reinsurance for themselves. As a government entity, they also do it. And there's key pieces that they have put in place to be able to absorb those types of natural catastrophes that happen. But the intricacies of how they look at it, I wouldn't be able to tell you just because I'm not in it. Does that make sense, Sean?
Yeah, that makes sense. I was just curious, with private insurers, is it different? Does the government insurers, like FEMA, do they just have the federal government? Is that their reinsurance compared to getting someone in a private industry for reinsurance?
So when for that specifically for FEMA, they went out to the reinsurance market. And I don't know exactly how they did it, but the reinsurers that are on other are partners with other insurance carriers from a private standpoint, they were the same for me and what I saw. So I think the pool is similar in nature. I don't think they go anywhere different. Is that answering your question? Because I don't know the intricacies of how they purchased it and what they did and how they view their exposure and what they choose to buy. But as a reinsurer, the company that I was part of at one point in time, they were a reinsurer for that type of coverage for FEMA. So they might be within the same pool. And if anyone who's on in listening to this, if you're in reinsurance and I'm not answering the questions and you have an answer to it, please feel free to jump in. Charlie, do you have another question?
Yeah, so my question is, how much regulation is there in the reinsurance industry? I don't know if you have any idea about that, but can you tell us, like, I know there's regulation levels for, certain types of lines of business, but for just reinsurance in general, like, how strict is it out there?
I would say it would probably be similar. I'm not on that side of things to be able to share exactly, but I would say it's definitely regulated for sure. Exactly what it is and what avenues are the regulatory, bodies that touch on that. I'm going to get back to you on that because, like I said, I wanted to keep this very high level, but I seriously appreciate all the freaking questions that you guys are giving me because it's really giving me things to think about. So the next time I'm going to do something like this is really touching on certain areas that you guys have talked and asked questions about that maybe would allow others to learn more about it and not just as basic as I chose to do it this way. So thank you for challenging me.
No worries. And I
But
see Jacob has another question in the chat.
let me see.
Did you already ask that question, Jacob, or do you have a new question?
It is a new question. I love Jacob. Jacob, I think you and I are going to be really good friends because you're going to help
Right.
me build my next presentation.
Right.
'Cause
There
Jacob's
you go.
going
I'm
into
very curious
reinsurance.
person.
No, and I appreciate that. But yes, are there reasons why the question is there any reason you would turn an insurance company away other than high amounts of loss? That pretty much to me, I would think is an avenue of why someone might not want to participate on a reinsurance cover that an insurance company is buying, right? At the end of the day, it is a business and everyone wants to be profitable. And if the company that they're partnering up with year after year is not having good outcomes, that's also a dire, strain on your company. So most of the times, there are times where you would say no, you wouldn't jump on board. Like a reinsurer would say, no, I'm not going to place a line on this just because of X, Y, Z. And most of the times, it is due to loss, right? High loss volume that they're on the hook for. So does that answer your question directly?
Yes, yes, it does. I have a follow-up question real fast. Like, how would that compare to wildfires? Like, I saw a lot of people were pulling out of California for wildfires.
Yeah. I will say if the insurance company in itself is really heavily, writing policies in that area and, you're the reinsurer on it, there is a relationship aspect to insurance and reinsurance and how it all ties together from my standpoint is that there are times where you understand that these are out of your control and things of that nature. But when you look at everything, you have to look at it at what becomes financially, good for you and the company, right? So there are times where things like that, if it happens so often and you're taking a hit every single time, you can't help but to have to say no. As much as like it's not something you would want to do. Just like companies don't want to all of a sudden not provide policy coverage for a policyholder. But over time, there are things that people look at to see what works best for them and the company at hand.
No, of course.
Do you have anything else, Jacob? Because I'm about to go to Melissa because I see her hand up.
I think he's okay for now.
Okay.
But he might be back. He might be back.
Hi, Melissa. Did you have a question? And I think that's probably the last one.
Hi, I was just wondering if you had any resources for learning more about how a retrocession worked. I know that's not the topic of this, but
it's okay. So to answer Melissa's question, so everyone who's on, so Melissa asked about retrocession, and so okay, these transactions in insurance, reinsurance could literally go on and on. So a reinsurance company could literally buy their own reinsurance coverage, and that's where retrocession comes into play.
Let's take a moment to absorb that. Let's all take a moment to absorb that concept, right? So there's an insurance company, right? They purchase their own insurance, which is reinsurance, And then the reinsurance company purchases their insurance, right? So that's what we're talking about now.
And that's what you call retrocessionaires and things of that nature. So for you, Melissa, like, so let me just get back to, because that was just a lot, because I never in my wildest dreams did I ever think someone was going to ask about retrocessionaires or retrocession in general. So can you just repeat your question real quick, Melissa?
I'm just curious more about it, to learn more about it. So just what resources do you have for like learning about how that works? Because I know when it came to reinsurance, like my school, we had textbooks that um, were very good about teaching about facultative reinsurance and all that.
Mm-hmm.
But they had so little information about retrocession. But in the past, it kind of used to be a problem because, as Tandeka was saying, it is insurance for reinsurers. So what eventually happened, I think, was it about 30 years ago in Lloyd's when all the retrocession went wrong because everybody was depending on each other. They somehow fixed that. But I was just curious about learning more about it.
I don't know of anything where it's targeted around retrocession in general. I've only worked for companies that did it, so I've been able to understand that piece of it a little more. But there is, I don't know if anyone does specific on retrocessions, but like there are two organizations that focus on reinsurance specifically, and that's the Reinsurance Association of America. And I'll drop that, or like if Tandek, if you could look it up, it's Reinsurance Association of America. They have a educational track on reinsurance in all the different areas. Retrocession is not one of them, but you make a good point that I might share it with them for them to think about maybe doing a webinar about it. And then another one that someone had dropped in the chat was the IRUA, which is the Reinsurance Underwriting Association, I believe it is. And I'll try to drop that. If you can find IRUA too, Tandeka, that's another organization that focuses on reinsurance from an educational standpoint that you might want to touch on. And it's something that I could bring to them and see if they would be willing to find something on retrocession specifically and doing a webinar, so something virtually that everyone can attend.
Yeah,
Thank you.
It's such a great question. I really also haven't seen anything on like retrocession just in
You're
terms
right.
of like webinars, information. I don't even know anyone that works in that, specific sector. But it's out there. It's out there. So maybe we can create the first webinar on it.
Yeah, we totally can.
And
All
there
right,
is
I know
a
we're on
question.
time. Go ahead,
Yes.
Charlie.
And right. So Charlie has a question. Vin also has a question. But how are you doing on time, Lee? Do you have a few extra minutes to
Yeah,
stay
sure.
over? Okay. All right. Go for it.
Yeah, so just going off the top of that. So if we want to learn about, basics, the introduction, do you recommend some of us that's already in the insurance industry taking that certification, Associates in Reinsurance?
The ARA, yes. For
Yes.
you guys, I would say that is a great place to start. As you get into it more, and once you get that designation, I think the RAA, like the Reinsurance Association of America, the courses that they do, and the IRUA, the ones that they do virtually, would be really, really beneficial. But feel free to reach out to me, connect with me on LinkedIn, and then I'm sure I could connect you with someone who might be able to talk to you about other different things. Like I told you about Allison. I literally just saw her yesterday, so she'll be a good one for you guys to connect with. Vin, I see you have a question. Come on, I want you to pop out on and ask.
Yeah, hello. It's great to see you again, Lee.
Hi.
So today, I think we learned a lot from reinsurance, and I have curious about like, what are maybe some big challenge that reinsurers are facing today, maybe about wildfires and maybe cyber risk, for example.
I think it's very similar in nature of like the different challenges are pretty much what the insurance industry is facing is obviously the natural catastrophes, right? So for reinsurance companies, they just don't partner up and are on just a partner with one insurance company. They do multiple, right? They have multiple carriers that they are partnering from a reinsurance standpoint. So for reinsurers specifically, what I've seen in my past is that when you accumulate all that risk and all that exposure, that number is a lot bigger than what it is just for the insurance company. So when you have these types of nat cats and things of that nature, it's going to impact them financially, right? And usually with that happening, of course, there's a trickle effect that happens from there. I think emerging type risks, cyber being one of them, different emerging risks that's out there are usually kind of like key areas where reinsurers will face some challenges in understanding that type of risk, right? When you don't really have much information about it, it's like being able to gather all that information and understanding as much as you can. So it's similar, but it's just on a bigger scale for reinsurers, I believe.
Yes.
Because the accumulation of risk.
Yes. Yeah, I see. Thank you.
Awesome. Thank you. Good to see you.
And we have one more question, if that's okay, Lee. We have one more question from Juliana, if you're okay with asking it.
Please jump on. I'd love to, I just connected with her on LinkedIn through her, because she's interning with one of the companies that we do business with. So please, Juliana, please.
Hi, Lee. My name is Juliana Davis. I'm currently an intern at Chubb. I'm the Brandywine Reinsurance Claims Department. And I am a triple major in supply chain, BIA, and AI. So I wanted to get a bit more of information. Have you seen what positive advancements with this new technology emerging that you've seen in reinsurance or the insurance industry in general?
There is so much technology out there for the insurance industry. I feel like reinsurance is a bit behind in all that because you know who you work for. And so, okay, I'm going to put out another term, which is called legacy reinsurance. And when I say legacy reinsurance, the chain of pretty much all the different avenues and the transactions that happen literally can go back decades. And this is kind of where I've been able to meet Juliana, right? And she's part of the legacy reinsurance. And this is legacy going back, obviously, 50, 30, 40 years ago, whatever the case is, that those types of ways to get AI and technology in it, to me, is very difficult because it's so convoluted. There's so much, so many different areas and structures that there's no real system or no one who's been able to come up with it. Maybe you might, right? Because you're in it, you see the challenges that you could have, not having information, not being able to gather everything together to see the bigger picture. That is a huge challenge for reinsurance specifically. I don't know if there's anyone who's been able to come up with a solution from an insurer type standpoint that would be able to find more ways that reinsurance could be efficient outside of what you see in insurance and maybe just pulling data, AI, large language models, things of that nature. I don't know if there's anything specific that I've seen for our reinsurance, and especially legacy, definitely not.
Yeah, no, I haven't. Working in some projects, haven't seen that, so that's why I was curious to see your point of view on that. But yeah,
there are some insurtechs that I've seen that could be right, and I could share that with you offline because there's something that someone who is in legacy is doing something with this insurtech that I think could be helpful, but I'm not sure where that's going to go yet. So Jacob, at what point should there be a cutoff for legacy? There is no cutoff for legacy. Legacy goes on for decades upon decades. And Juliana could attest, how far do some of the things that you look at go back?
Right now, for what I've seen, 1950s.
Yeah, I've definitely seen things before that. But yeah, so to me, there's no real cutoff in the sense of wait, hold on. His question is cutoff for legacy, so it could be up to date. Can you elaborate a little more on that question, Jacob?
Yeah,
exactly. I don't know why you were typing your question instead of just unmuting.
Well, okay. So what I was asking is, you said going back, it gets complicated, more convoluted, and it's not really up to date. Things were done a certain way, and there's not really a record of it. At what point do you have to cut that off and make it up to date?
That's a good question. I haven't seen, I guess, like, having the paper details could try to get it there, but sometimes it's just really difficult when the people who placed that reinsurance at that time either no longer is here, the information that was on paper is gone. So to bring it up to date, you could only do, and pretty much at some pieces of it, only could estimate what it could be to try to get it as close as possible. You're never going to be like 100% black and white, say, okay, this is what the loss is, this is exactly what you need to pay us, and these are clear-cut black and white numbers. There's a lot of detail in that gets missed, so it's almost as if you kind of have to, I wouldn't say, like, like with actuaries, you have to kind of, sometimes project out what you think could be, like, the total exposure for a loss, where companies will put up IBNR, right, on a book of business or whatever the case is, to kind of maybe look at it. Sometimes you don't always have that, but so you try to kind of maybe put some parameters around it to kind of get you as close as possible. And at the same time, there's a lot of coverage issues that can come up. So there's just so many different moving pieces to it that you're never going to be able to do it as clear cut as you do on current stuff, where you have the valid information to validate everything that you have.
Awesome.
Of course, thank you.
It's going to be my best friend.
Right, exactly. So I think this will be a good point to cut off the webinar. But this is absolutely fantastic. I'm loving the engagement. I'm loving all of the questions that popped up during the session. So I know I mentioned before that we host these sessions on a weekly basis. However, next week, Thursday, is Juneteenth, and our offices will be closed. I'm sure many of your offices will be closed as well. So happy Juneteenth. So our next session is going to be the following Thursday, which is June 26th. It's going to be at the same time, 1 to 2 Eastern. And our presenting organization is going to be Salvi Strategies. And our guest speaker is a professional performance coach who is going to teach us how to develop a high performance mindset to achieve excellence at work. So thank you so much, Lee, for being with us here today. If you could all join me in a virtual round of applause for Lee. We truly appreciate your time, for hanging out with us for over an hour. We truly appreciate the additional time that you spent with us today. And for all the students that are here with us, I will catch you in 2 weeks.
Awesome.
Happy Juneteenth.
Thank you so much, guys. Have a wonderful afternoon.
Thank you so much, Lee. Have a good one.
Thank you so much for your time.
Thank you.